Welcome back. Let's do some three-stock lunch, shall we? We're going to hit three different names today that are firmly in the red, but ask our trader what investors should do with them. Are they a buy, any of them? James Demmert is here to answer this. He's the CIO at Main Street Research, rocking the double goatee and hairdo today. James, it's great to have you. Okay, let's start with FedEx. A really rough session for the stock, down about 6.5% after the company slashed its full-year guidance. They're talking about uncertainty, weakness in the U.S. industrial economy. Is this a chance to pick it up?
Hi, Kelly. I don't think it is. We still think it's a sell. Third time in a row that they've cut profit outlook and reported revenue and earnings that missed expectations. Even at 14 times earnings, I don't think this is a healthy choice for lunch. And if I were to sort of say I want to stay in the industrial space, I would buy Hitachi. More diversified, certainly a Japanese name, lots of great reasons to have a Hitachi for lunch as opposed to a FedEx. Just terrible numbers, even at down 30%. I just don't think it's a buy.
It's amazing to watch what's happened with FedEx and UPS and Hitachi. There it is, up almost 30% in the year. All right.
Next up is another industrial name, Cleveland-Cliffs. It is a steel producer. It is lower after the Minneapolis Star-Tribune, you go Star-Trib, reported that Cleveland-Cliffs would temporarily idle two factories because automakers have cut their orders all amid tariff uncertainty. What's your take on CLF?
Yeah, Brian, Cleveland-Cliffs has been another disastrous stock, and declining sales, a recent miss on top and bottom when they reported last month. Even at 13 times earnings, we'd be a seller. The stock's down 57% from its high. A healthier choice for lunch if I want to stay in that space, and I think it's a good space, that material space, is Linde. Go over to Europe. It's a UK-based. They used to own Praxair. You may recall Praxair. They make all kinds of gases, nitrogen, stuff that we need to weld. We think there's a lot of story in that with the potential reconstruction of Ukraine. So again, UK-based Linde would be an alternative. That's where we'd go, but not Cleveland-Cliffs.
All right, so we're 0 for 2. That brings us to Nike. Different space entirely. The athletic apparel maker, down 5%, had that awful, well, some would say awful earnings report. It warned that sales will fall in the current quarter. Are you buying Nike on this turnaround and on this additional dip?
Yeah, Kelly, interesting, right? 9% decline in revenue on those numbers across all areas. So it's not just a China problem anymore. We would be a seller. I hate to say it. A stock's down 61% from its high. And again, it's just a large company. It's hard to turn, and they've got this modern competition from companies like Hoka. We'd be a seller, and again, a healthier choice for lunch. I'd go to Booking. Again, I'd go overseas. Booking based in Amsterdam. They have a moat around that business, no pun intended with the Amsterdam water connection there. But that business has got very high profit margins. Booking is what I would do as opposed to Nike here.
Is it just a coincidence you're looking abroad for opportunities here? Any kind of comment on the market more broadly? Look, we've had this sell-off. We've had a few different guests coming on, Andrew Sliman, Tom Lee, saying they think that we've put in a bottom. What do you think?
Well, we think we have put in a bottom in the U.S. market, but we think the valuations in Europe are just too appealing to ignore. And we've always been a global manager. So if you look at PE ratios relative to growth overseas, they're a lot more appealing. So we have a lot of U.S. positioning. We think this market has bottomed. We agree with Tom and some of the other more optimistic views. But we also see a lot of opportunities in Europe not just over the next year. We think there's a new cycle outside the U.S., and we want to make sure our clients are taking advantage of it.
All right, James, appreciate it today.
Always good to see you.
James Demmert, Main Street Research.